What is a segmented income statement using variable costing? Or restated, what is a variable costing income statement? Well, basically, it's a different approach to how you arrive at your contribution margin and how you treat fixed and variable costs. Okay, so to start with, all your variable expenses are deducted from your revenue to arrive at a separately stated contribution margin. Okay, so that's the segmented element to start with. Then all your fixed expenses are subtracted to arrive at whatever your net profit or loss will be for the period. Okay, so to break this down a little further, let's see how this works. All right, so we start with our revenues, right? Then we are going to subtract from our revenues our variable production expenses and our variable selling and administrative expenses. Okay, this is what gets us down first stage to the contribution margin. After that, we're going to have to subtract out our fixed production expenses, okay? And that includes most overhead in the calculation, and then subtract out our fixed selling and administrative expenses to get down to our net profit and loss. Okay, so with that being said, what's the difference between this and your traditional income statement? Well, in this case, all fixed production costs are aggregated at a lower level in the statement after the contribution margin. Okay, so that's a different thing. It also, having that separated definitely allows for the calculation of certain variables more easily, right? So all variable selling and administrative expenses are grouped into variable production costs as part of the calculation of contribution margin. Okay, so again, the contribution margin is an easier calculation to pull from the segmented income statement there, and the gross margin is replaced by the contribution margin so that you can determine the proportion of expenses that really varies directly with revenue as revenue changes. Okay, so anyway, this is the approach to variable costing to create the segmented income statement and why it's useful and how it differs from the traditional income statement.